Question 1. What is the main difference between EPO, Preferred Provider Organization, and HMO, Health Maintenance Organization, plans in terms of provider flexibility? A PPO plans require members to choose a primary care physician PCPE. HMO plans allow members to see specialists without referrals from a primary care physician PCPE. PPO plans allow members to see out-of-network providers without significant cost sharing. D. HMO plans offer more flexibility in choosing healthcare providers without additional costs. Answer: C. PPO plans allow members to see out-of-network providers without significant cost sharing. Explanation: PPO plans generally offer more flexibility compared to HMO plans. With PPO plans, members can seek healthcare services from out-of-network providers, although doing so often requires higher out-of-pocket costs. On the other hand, HMO plans require members to choose a primary care physician PCP and obtain referrals to see specialists, which limits provider flexibility. PPOS do not have the same restrictions for out-of-network services, but they come with higher costs for using non-network providers. Question 2. Mr. Thompson is a member of a group health insurance plan offered by his employer. He is considering switching to his spouse's health insurance plan due to lower premiums. Which of the following would most likely be the correct course of action? A. Mr. Thompson should remain on the employer's plan because he cannot switch to his spouse's plan. B. Mr. Thompson can switch to his spouse's plan during the annual open enrollment period or if he experiences qualifying life event. C. Mr. Thompson must wait until the next open enrollment period of the spouse's plan, even if it is outside of the employer's open enrollment period. D. Mr. Thompson should only consider switching if the employer's plan has lifetime limit on benefits. Answer: B. Mr. Thompson can switch to his spouse's plan during the annual open enrollment period or if he experiences a qualifying life event. Explanation: under the Health Insurance Portability and Accountability Act, HIPAA, and the Affordable Care Act, a special enrollment period allows individuals to change their health insurance plans if they experience a qualifying life event, such as marriage, divorce, or loss of coverage from another plan. If Mr. Thompson wishes to switch to his spouse's plan, he can do so during the open enrollment period or after qualifying event, such as his employer's plan being discontinued or changing coverage. Question 3. Which of the following is a characteristic of the Medicaid program in Oklahoma? A. Medicaid provides the same coverage and eligibility criteria across all states with no state-specific variations. B. Medicaid in Oklahoma provides coverage primarily for individuals with high income levels. C. Medicaid eligibility in Oklahoma is based on a combination of income, household size, and other state-specific requirements. D. Medicaid in Oklahoma is only available to individuals over the age of 65. Answer: C. Medicaid eligibility in Oklahoma is based on a combination of income, household size, and other state-specific requirements. Explanation: Medicaid is a joint federal and state program, and each state has its own rules regarding eligibility and coverage. In Oklahoma, Medicaid eligibility is determined based on factors like income, household size, and other specific state requirements. Unlike federal programs such as Medicare, Medicaid is designed to provide coverage for low-income individuals, pregnant women, children, the elderly, and people with disabilities. The eligibility criteria can vary significantly by state, and income is a primary factor. Question 4. Which of the following is a primary feature of health savings accounts HSAS that differentiates them from health reimbursement accounts HRAs? A. HSAS are employer-funded, while HRAs are funded by employees. B. HSAS are only available with high-deductible health plan issues, while a HRAS can be used with any health plan. C. HRAs allow for tax-free withdrawals for non-medical expenses, while HSAS do not. D. HSAS have higher contribution limits than HRAs. Answer: B. HSAS are only available with high-deductible health purchases, while HRAs can be used with any health plan. Explanation: health savings accounts HSAS are specifically designed to work with high-deductible health plans. One of the key features of an HSA is that it allows employees to make tax-deductible contributions to pay for qualified medical expenses. On the other hand, health reimbursement accounts HSAs are employer-funded and can be used with various types of health plans, including plans that may not be high-deductible. While both HSAS and HRAS provide tax advantages for medical expenses, they differ in their eligibility and funding structures. Question 5. Under the Affordable Care Act, which of the following is A key requirement for health insurance plans offered through health insurance marketplaces. A. Plans must cover only essential health benefits, such as dental and vision care. B. Plans must provide lifetime limits on coverage for certain health conditions. C. Plans must not deny coverage due to pre-existing conditions. D. Plans must offer a minimum coverage limit for all non-emergency procedures. Answer: C. Plans must not deny coverage due to pre-existing conditions. Explanation: one of the primary protections under the Affordable Care Act (ACA) is that health insurance plans cannot deny coverage or charge higher premiums due to pre-existing conditions. This is a key consumer protection aimed at ensuring that individuals with health conditions do not face discrimination when applying for insurance. Additionally, the ACA requires that health insurance plans cover essential health benefits, but it does not impose lifetime limits on benefits, which were common in pre-ACA plans. Question 6. Ms. Brown, a policyholder, is applying for group health insurance through her employer. Her employer has agreed to provide coverage, but Ms. Brown has concerns about the premium cost for her dependents. Which of the following statements about dependent coverage under group health plans is most accurate? A. Employers are not required to offer coverage for employees' dependents under group health insurance plans. B. Employers can offer coverage for dependents, but they are not required to do so under any circumstances. C. Employers must offer dependent coverage under group health plans, but they may impose limits on the number of dependents. D. Employers are required to offer dependent coverage under group health plans, but employees must pay for all dependent coverage at full cost. Answer: C. Employers must offer dependent coverage under group health plans, but they may impose limits on the number of dependents. Explanation: under the Affordable Care Act, ACA employers are required to offer dependent coverage under group health insurance plans. However, employers can impose certain limits, such as the number of dependents who can be covered or the age of the dependents, commonly up to age 26. Employers may also require the employee to pay part or all of the premium for dependent coverage, but the employer is responsible for offering the coverage. Question 7. Mr. Garcia is applying for a new health insurance plan under the Affordable Care Act (ACA). He is confused about the terms individual mandate and a penalty. Which of the following accurately describes the individual mandate under the ACA? The individual mandate requires individuals to purchase health insurance or face a penalty if they do not. B. The individual mandate mandates that individuals can only purchase health insurance through their employer. C. The individual mandate ensures that individuals who are under the age of 30 can receive health insurance at no cost. D. The individual mandate applies only to those with incomes above 400% of the federal poverty level. Answer A. The individual mandate requires individuals to purchase health insurance or face the penalty if they do not. Explanation: the individual mandate was a core component of the Affordable Care Act (ACA). It required most Americans to have health insurance or face the tax penalty for non-compliance. While the penalty for not having insurance was effectively eliminated at the federal level starting in 2019, some states have introduced their own mandates and penalties for uninsured individuals. The ACA also provided subsidies for low-income individuals to help them purchase coverage through the health insurance marketplace. Question 8. What is the primary purpose of coordination of benefits (COB) in health insurance claims processing? A. To ensure that the health insurance plan with the highest premium pays the majority of medical expenses. B. To prevent the duplication of benefits when a policyholder has coverage under more than one health insurance plan. C. To require that the insurer of the policyholder's spouse pays for medical claims first. D. To ensure that all medical claims are paid directly to the healthcare provider. Answer B. To prevent the duplication of benefits when a policyholder has coverage under more than one health insurance plan. Explanation: coordination of benefits (COB) is a process used when a policyholder has health coverage under more than one plan, such as a primary insurance plan and a secondary plan. The goal of COB is to prevent overpayment or duplication of benefits. The primary insurance plan pays first, and the secondary plan may cover additional expenses not covered by the primary plan up to the allowable limits. COB rules are designed to prevent policyholders from receiving more benefits than their medical expenses. Question 9. Which of the following best describes a waiting period in health insurance policies? A. A waiting period is a period during which the insurer is not allowed to pay any claims for medical expenses. B. A waiting period refers to the time a policyholder must wait before receiving insurance coverage for certain medical conditions. C. A waiting period is a time during which your policyholder must pay premiums before the coverage becomes effective. D. A waiting period is the amount of time the insurer will cover all claims regardless of medical conditions. Answer: B. A waiting period refers to the time a policyholder must wait before receiving insurance coverage for certain medical conditions. Explanation: a waiting period in health insurance refers to the period that a policyholder must wait before receiving coverage for certain medical conditions or services. For example, some policies may have a waiting period for maternity care or pre-existing conditions. During this period, the insurer may not cover claims related to specific conditions, though the policyholder is still required to pay premiums. Waiting periods are typically disclosed when purchasing a policy and vary depending on the insurer and the type of coverage. Question 10. Mr. Williams is considering purchasing a long-term care insurance policy. Which of the following is an important feature to understand when evaluating long-term care insurance? A. Long-term care insurance only covers nursing home care, not home health care or assisted living. B. The benefits of long-term care insurance are generally payable on a per-day basis and are subject to a waiting period. C. Long-term care insurance does not have any exclusions or limitations based on pre-existing conditions. D. Long-term care insurance policies are typically designed to cover all healthcare expenses after age 65. Answer: B. The benefits of long-term care insurance are generally payable on a per-day basis and are subject to a waiting period. Explanation: long-term care insurance is designed to cover services that are needed over an extended period, such as nursing home care, home health care, and assisted living. Benefits are typically paid on a per-day basis, and the policy may include a waiting period before the benefits are triggered. It's important for consumers to understand the specific terms of the policy, including the daily benefit amount, the services covered, and any exclusions or limitations based on pre-existing conditions. Question 11. Which of the following is a characteristic of a preferred provider organization (PPO) health insurance plan? A. Members must choose a primary care physician (PCP) to receive referrals for specialty care. B. Members can visit any healthcare provider without a referral, but will pay less if they use in-network providers. C. PPO plans require all care to be received from in-network providers only. D. PPO plans cover only preventive services and urgent care. Answer: B. Members can visit any healthcare provider without a referral, but will pay less if they use in-network providers. Explanation: a preferred provider organization plan offers flexibility by allowing members to visit out-of-network healthcare providers, although they will generally pay more for those services. Unlike health maintenance organization (HMO) plans, PPOS do not require referrals from a primary care physician for specialty care. Members can choose providers both inside and outside the network, but in-network providers offer lower costs. Question 12. What is a key difference between a health maintenance organization (HMO) and HPIA? HMO plans are usually more expensive than PPO plans. B. PPO plans typically require referrals for specialist visits, while HMOs do not. C. HMO plans require members to choose a primary care physician and get referrals for specialists. D. PPO plans have no network restrictions, while HMO plans have strict network limitations. Answer: the HMO plans require members to choose a primary care physician and get referrals for specialists. Explanation: health maintenance organizations (HMOs) typically require members to choose a primary care physician (PCP), and the PCP is responsible for coordinating care, including referring members to specialists. PPOS, on the other hand, offer more flexibility by allowing members to see specialists without a referral and visit out-of-network providers, though at a higher cost. Question 13. Under the Affordable Care Act account, what does the term essential health benefits refer to? A. The benefits that only cover inpatient care, such as hospital stays and surgeries. B. The set of 10 categories of health services that must be covered by all qualified health insurance plans. C. Only the preventive services required by law to be covered at no cost to the insured. D. A requirement that all health insurance plans cover a minimum of $500,000 in benefits per year. Answer: B. A set of 10 categories of health services that must be covered by all qualified health insurance plans. Explanation: The Affordable Care Act (ACA) mandates that all health insurance plans sold in the marketplace must cover 10 essential health benefits. These benefits include services such as emergency care, maternity care, mental health services, prescription drugs, and preventive care. This provision ensures that basic health needs are met for all individuals, regardless of the plan they choose. Question 14. Which of the following is an example of a pre-existing condition in health insurance? They are a condition that develops after the policyholder has enrolled in a health insurance plan. B. A condition that existed before the policyholder applied for insurance and was disclosed to the insurer. C. A condition that is covered by all health insurance plans, regardless of the individual's medical history. D. A condition that affects a policyholder's ability to purchase coverage through health insurance exchange. Answer: B. A condition that existed before the policyholder applied for insurance and was disclosed to the insurer. Explanation: a pre-existing condition refers to a health condition that was diagnosed or treated before an individual applies for health insurance. Under the ACA, insurers are prohibited from denying coverage based on pre-existing conditions, and they cannot charge higher premiums for these conditions. However, in some cases, a waiting period may apply to coverage for certain pre-existing conditions, depending on the plan. Question 15. Which of the following is not typically covered under a standard health insurance policy? A. Emergency care. B. Cosmetic surgery. C. Preventive care. D. Maternity services. Answer: B. Cosmetic surgery. Explanation: standard health insurance policies generally cover essential medical services, including emergency care, preventive care, and maternity services. However, cosmetic surgery is typically not covered unless it is medically necessary, such as in the case of reconstructive surgery after an accident or illness. Most policies exclude elective cosmetic procedures. Question 16. What is the purpose of the out-of-pocket maximum in a health insurance plan? A. It is the total amount the insured must pay in premiums for the plan year. B. It is the highest amount the insurer will pay for medical expenses in a plan year. C. It is the maximum amount an insured person must pay for covered services before the insurance covers 100% of the costs. D. It refers to the cost-sharing amount for preventive care services. Answer: C. It is the maximum amount an insured person must pay for covered services before the insurance covers 100% of the costs. Explanation: the out-of-pocket maximum is the highest amount an insured individual will pay for covered healthcare services in a plan year. Once this amount is reached, the insurance company will cover 100% of the costs for covered services. This amount includes deductibles, copayments, and coinsurance, but not premiums. Question 17. What is the deductible in a health insurance plan? A. The amount an insured person must pay each time they visit a healthcare provider. B. The amount an insured person must pay before the insurance begins to pay for covered services. C. The percentage of medical expenses that the insured person must pay after meeting the deductible. D. The amount the insurer will pay for preventive care services. Answer: B. The amount an insured person must pay before the insurance begins to pay for covered services. Explanation: a deductible is the amount an insured individual must pay out of pocket before their insurance starts covering medical expenses. For example, if a policyholder has a $1,000 deductible, they must pay the amount in covered expenses before the insurer will contribute to further costs for the year. Question 18. Under the Affordable Care Act account, which of the following is not a requirement for health insurance plans offered through the health insurance marketplace? A. Plans must cover essential health benefits. B. Plans must cover mental health services. C. Plans must exclude coverage for individuals with pre-existing conditions. D. Plans must provide a minimum level of coverage as defined by the actuarial value. Answer: C. Plans must exclude coverage for individuals with pre-existing conditions. Explanation: under the ACA, health insurance plans offered through the marketplace must cover essential health benefits, including mental health services, and cannot exclude coverage for individuals with pre-existing conditions. The ACA ensures that individuals cannot be denied coverage or charged higher premiums based on their medical history. Question 19. Which of the following is a feature of a high-deductible health HHP? It generally has higher premiums and lower out-of-pocket costs. B. It is designed to be paired with the health savings account HSA. C. It requires no deductible for emergency care services. D. It only covers preventive services and wellness checkups. Answer: B. It is designed to be paired with a health savings account HSA. Explanation. High-deductible health PSHs have lower premiums, but higher deductibles compared to traditional health plans. They are specifically designed to be paired with health savings accounts (HSAs), which allow individuals to save money tax-free for medical expenses. The combination of HSAs can help individuals save on premiums while still preparing for higher out-of-pocket medical costs. Question 20. What is coinsurance in health insurance? A. The fixed amount a policyholder must pay for each healthcare service. B. The percentage of the total cost of care that the insured person must pay after meeting the deductible. C. The amount an insured person pays before the insurance begins to cover medical expenses. D. The total amount the insurer will pay for medical expenses during the policy year. Answer. B. The percentage of the total cost of care that the insured person must pay after meeting the deductible. Explanation. Coinsurance is the percentage of medical costs that the insured person must pay after meeting the deductible. For example, if a policyholder has a 20% coinsurance, they will pay 20% of the cost of care and the insurer will pay the remaining 80% once the deductible is satisfied. Question 21. Which of the following is true about health savings accounts? HSAs. A. HSAs are only available to individuals enrolled in Medicaid. B. Contributions to HSAs are tax-deductible, but withdrawals for qualified medical expenses are taxed as income. C. HSAs can only be used to cover costs for dental and vision services. D. Individuals with the high deductible health PSH are eligible to open an HSA. Answer. D. Individuals with a high deductible health PSH are eligible to open an HSA. Explanation. Health savings accounts (HSAs) are available to individuals enrolled in high-deductible health PSHs. Contributions to an HSA are tax-deductible, and withdrawals for qualified medical expenses are tax-free. HSAs are a way for individuals to save money for healthcare expenses while reducing their taxable income. Question 22. What is the premium in a health insurance plan? A. The amount an insured person must pay each time they visit the doctor. B. The amount the insurance company pays to cover healthcare expenses. C. The fixed amount paid by the insured to the insurance company to maintain coverage. D. The amount the insured person must pay before the insurance starts covering services. Answer. C. The fixed amount paid by the insured to the insurance company to maintain coverage. Explanation. A premium is the fixed amount that an insured individual pays to the insurance company on a regular basis, monthly, quarterly, or annually to maintain their health insurance coverage. It is separate from other out-of-pocket costs like copayments, coinsurance, and deductibles. Question 23. Which of the following is not considered? A type of managed care plan. A. Health maintenance organization (HMO). B. Preferred provider organization (EPO). C. Point of service (POS). D. Indemnity plan. Answer. D. Indemnity plan. Explanation. Managed care plans such as HMOS, PPOS, and POS plans are designed to manage healthcare costs and provide a network of providers to reduce out-of-pocket expenses. An indemnity plan, on the other hand, allows the insured to see any doctor or healthcare provider, and the insurer typically reimburses the insured for covered services. Indemnity plans are less managed compared to the other types. Question 24. Under the Affordable Care Act, which of the following is not an essential health benefit required to be covered by insurance plans? A. Prescription drugs. B. Mental health services. C. Weight loss surgery. D. Preventive care. Answer. C. Weight loss surgery. Explanation. The ACA requires that insurance plans cover essential health benefits, which include services such as preventive care, mental health services, and prescription drugs. Weight loss surgery is not an essential health benefit and may not be covered unless deemed medically necessary. Question 25. What is the purpose of the waiting period in health insurance policies? A. It is the time the insured must wait before they are eligible to use certain services. B. It is the time the insurer must wait before making the first premium payment. C. It is the time between the enrollment date and the coverage start date. D. It is the time the insurer has to pay claims after an accident. Answer. A. Is the time the insured must wait before they are eligible to use certain services. Explanation. A waiting period is the time an insured individual must wait before becoming eligible for certain benefits or services, such as coverage for pre-existing conditions. Some plans may impose waiting periods for specific services like maternity or mental health care. Question 26. What is the function of A primary care physician (PCP) in a managed care health insurance plan. A. The PCP is only responsible for administering emergency care. B. The PCP coordinates all aspects of a patient's care and provides referrals to specialists. C. The PCP handles billing and administrative tasks for the insurance company. D. The PCP is an optional service that the insured can use if needed. Answer: B. The PCP coordinates all aspects of a patient's care and provides referrals to specialists. Explanation: in a managed care health insurance plan like an HMO, the primary care physician (PCP) serves as the coordinator for all healthcare services. The PCP provides general care and refers the patient to specialists when necessary. The PCP plays a key role in managing the patient's health and preventing unnecessary treatments. Question 27. What is the role of a stop-loss provision in a health insurance policy? A. It sets a limit on the amount of health insurance premiums an individual can pay annually. B. It prevents the insurer from increasing premiums after a policyholder experiences a major health event. C. It limits the total out-of-pocket expenses that an individual must pay in a year. D. It specifies the maximum number of hospital stays a policyholder can have. Answer: C. It limits the total out-of-pocket expenses that an individual must pay in a year. Explanation: a stop-loss provision is a feature in health insurance plans that limits the total amount of out-of-pocket expenses an insured person must pay in a given year. Once this limit is reached, the insurance plan will cover 100% of additional covered expenses for the remainder of the policy year. Question 20. What is a copayment? Copay in a health insurance policy. A. The portion of medical expenses the insured must pay before coverage begins. B. The fixed fee that the insured pays at the time of service for a covered healthcare service. C. The amount the insurer pays directly to a healthcare provider. D. The total amount an insured person must pay for emergency care. Answer: B. The fixed fee that the insured pays at the time of service for a covered healthcare service. Explanation: a copayment copay is a fixed amount that an insured person pays for a covered healthcare service at the time the service is provided. For example, an individual might pay a $20 copay for a doctor's visit while the insurance covers the rest of the cost. Question 29. Under the Affordable Care Act account, which of the following is true about preventive care? A. Preventive care is not covered under most health insurance plans. B. Preventive care services must be covered at no cost to the insured under most health insurance plans. C. Preventive care services are covered only for individuals over the age of 65. D. Preventive care services are covered only if they are prescribed by a specialist. Answer: B. Preventive care services must be covered at no cost to the insured under most health insurance plans. Explanation: the Affordable Care Act account requires that most health insurance plans cover preventive care services without charging the insured any copayment or deductible. This includes services such as vaccinations, screenings, and counseling to prevent illness and detect diseases early. Question 30. Which of the following is an example of a catastrophic health insurance plan? A. A plan that provides high coverage with low premiums and low deductibles. B. A plan designed for young adults under 30, covering only essential health benefits after a high deductible is met. C. A plan that covers all medical expenses with no deductible or coinsurance. D. A plan that covers only hospital stays and emergency care. Answer: B. A plan designed for young adults under 30, covering only essential health benefits after a high deductible is met. Explanation: catastrophic health insurance plans are designed to provide coverage in case of serious accidents or illnesses. They have low premiums but high deductibles and cover only essential health benefits after the deductible is met. These plans are often available to young adults under 30 and those who are exempt from other types of coverage.